Greetings, everybody. This is Jeff Scott. It's actually the 6th at about 10 p.m. Eastern Time, but this is my top-down review for the weekend of April 7th, 2019. And after last week, I said it was going up. It went up nicely. I titled today, Markets March Towards 2018 Highs. I suspect that has to be considered the short-term target. As always, this is for educational purposes only. Anything I recommend is in the spirit of education and should not be considered investment advice. I'm a doctor, not a broker. I'm independent. I pay for the tools that I use, and trading involves risk. You and you alone are solely responsible. And if I talk about options, you should be reviewing options at the Options Industry Council website and reading their brochures because they are considered risky. As always, I call out my influences. I started with Can Slim, improved by Morales and Katcher, taken to the computer by Ian Woodward with George Roberts of HGSI. Ron Brown became his partner. I think right now Ron and I are the two most vocal users of HGSI. We both put out a lot of webinars. Ron uses it for a volume spread analysis approach, and I'm more of an impulse momentum trader. George Lee, my buddy from Pacific Northwest, who just announced today a online educational program with him and Gil Morales. Van Tharp, Position Size Money Management King. Sager from Superior Profits, some great tools. And my buddy John Person, who I knew first as an inventor of some signals, software tools that I purchased. I read his books, went to his live meetings, and we've become friends. I have a lot of programs. Clearly, I don't use all of them or don't know how to use all of them. If I was on a desert island, I need TradeStation and Thinkorswim with my indicator packages. I use HGSI for majority of my analytics, supplemented by EdgeRater and the Edge tools from Superior Profit. And I've been playing around with TacticalTrader.com. I do supplement with seasonality and other websites. Speaking of websites, here's the websites for HGSI. I am not affiliated, but if you click on investing strategies without even registering, you'll see hundreds of videos by Ron and I. For a 30-day trial, you just click there. They don't even use your credit card. Stock patterns are cyclical, and we're back in this pattern where every time it looks like we're done and we're heading down, we have another leg up. So if anything, last week felt like we're in this green circle, and we still look like we're in the stage 2 of markup. And I expect the market to go higher from here. Now, I don't think it's going to go higher forever. There's certainly no guarantee it'll even hit the 2018 highs. But right now, the market feels bullish, and the employment numbers on Friday did not hurt. Since I'm bullish, that means I've turned much more to buying stocks, buying calls, selling puts, and bull put spreads. Since I do think the market is limited in upside from here, but still going up higher, I'm not against doing covered calls where I might sell a call at my target price, which reduces my cost of participation in the trade. Sea of green on sector review. It's hard to point out anything that is red. These are grains, they don't count. And currency futures, since we're talking stocks, pretty much green all over. If I look at the major markets, let's just look into Thinkorswim real quick. And let me maximize this cell. Here is the E-minis. This is going up since 2017, frankly, on the weeklies. Let's switch this to the dailies. Hold on a second. That's why it's going back so long. Perfect. We've been in an uptrend since the day after Christmas reversal. We are not quite at annual highs yet, but we're getting closer and closer, and we are in an uptrend. We have the 50-day has now crossed above the 200, the 17th uptrending. It's a very bullish-looking pattern. We'll say more later when we look at the cash markets. The NASDAQ futures look similar. The Dow futures had this kind of a shooting star candle on Friday, which by itself is a relatively bearish-looking candle. Before I say anything bearish, I'm just going to wait and see what Monday brings. The Russell 2000 finally broke above its 200-day moving average. The others had done it at least a couple of weeks ago, and is showing some strength. Now, off the bottoms, the Russell's actually outperformed. They just took longer to get above the 200. The 50 is still way below the 200-day moving average. The VIX has started to move back down towards complacency and is getting to where it was living in most of 2018. And then the dollar kind of going sideways here, but sideways in strength. If I look at the weekly charts real quickly, which is where we came in on, you can see that regardless of what I look at, we're in profound uptrends, and new weekly buy signal finally came in on the Russell. The VIX has come down, and the Dow the dollar's been relatively sideways with an upward spin, and you can see it's about to have a golden cross, which I guess confirms some of its strength. So markets by these charts are strong. Hold on one second. On my trade navigator, where I have three time frames, the top time frame is daily, then weekly, then monthly. And I have the E-minis, the NASDAQ futures, I have the Russell futures, I have the NYSE, and then the Dow futures. And you could see the less bullish candle on the Dow futures on Friday, but everything's in a profound uptrend. We're starting to flip over now to buy signals on the weekly as well. And the monthly has been strong for some time. What's underneath the market this week? Well, the rates stabilized. They actually moved up some, which to me is bullish. I want to get in between here on the 10-year, and we're almost there today. And I like to be above this line on the 30-year. So stabilized rates probably related to employment numbers and perhaps a sense of the economy being stable to improving. In white, we have the new high 80 lines on the Russell 2000, on the right, the 1000, and they've hit new highs of the year. In fact, if you look at the NYSE AD line, you can see it's peaked, highest it's been ever. The major market ETFs, the diamonds, the Qs, the Russell, the spiders are all moving up, transports. The only thing moving down with rates stabilizing and increasing, no surprise, with bonds, TLT. Breadth is actually starting to get a little bit overbought. You can see stocks above the 200 moved up this week, as did stocks above the 40. And if you look at the T21 indicator in Telechart, which is a 3-month or 12-week new high, new lows, we are at 96% new highs versus new lows. This is a place where the market usually reverses. Now, a reversal doesn't have to be a pullback. It could be sideways. McClellan, not quite at new highs. We've turned positive on the oscillator and summation index. Not much to say there. Current buckets add to the overboughtness of the market. 83% of stocks above the midline on their Bollinger Bands, and you can see now 15% of stocks are above the Bollinger Bands. And when I get to 25 or 30%, it's time for a pause to refresh or a pullback. No evidence of a Hindenburg omen, no shocker. You have to have a lot of new highs and new lows, and there are very few new lows in the market right now. The market tone flipped to bullish over the last week, and multiple sectors improved in strength. Canaries in the coal mines, the big stocks of maybe 18 months to 2 years ago, have finally jumped over its the 200-day moving average, which had been resistance. Actually retested it. That's actually kind of bullish. We'll see if it holds. My index of leaders from March 3rd, the interesting thing, the market went up and they went sideways, which suggests there's probably some rotation in the market. Know your news and earnings. As I look through, the key things were Jerome Powell speaking Wednesday, Thursday, Friday, and the Fed minutes come out Wednesday. And then we've got the usual jobless claims on Thursday, a PPI on Thursday, CPI on Wednesday, and some energy results on Wednesday. Since Powell's speaking, it's more than a little bit of news, probably medium news week. More importantly, as you can see here in MarketSmith, earnings start in earnest. We got the airlines, we got some banks at the end of the week as we start the next quarter's earnings. It's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. So my thoughts, the monthly unemployment numbers surprised the upside and drove the market higher on Friday, capping another strong week. Markets appear poised to attack not attach. Hello. I used to be able to spell. They're 2018 highs, which for the most part were in the third quarter. Powell speaks 3 times this week, and we get a peek at the last Fed minutes. Is the Powell put intact? I think that's something we'll be looking for. Again, earnings season has started, and still time to be long. But as we get oversold and May approaches, I'm starting to prune my holdings, keeping leaders and selling laggards. We'll do my usual top-down agenda and close this off. Save. So we just updated HGSI. I'm going to have to adjust the size of everything because different machine. I different resolution on my machine. I toned it down from 4K to 1920 by 1080. Let's just look at the major market analysis groups, and let's look at Major Markets Plus. And I want to take a quick second and talk about something that I put in. So if we go to top-down view, rank raw combo, you can see the strength of the market is mid-caps, biotech, small caps, Russell 2000, and NASDAQ. No wonder I had a good week. That's where I live. The S&P 500 actually lagged a little bit, although it was still up 2% on the week. And the true weakness was in the volatility and bonds, and then metals and some of the larger stocks. When I look at the S&P 500, now I'm opening up a view for my charts that you don't have. So let me just talk a little bit about this view and what my plans are. This view and other things today, you're going to start hearing about the JAS indicator. I haven't put a name on the indicator. My intent was to try and create an indicator that would signal quicker than the bongo when a new trend is coming or beginning or one is ending. And I like buying when you have a weekly uptrend, the daily stock is pulled back, and then we have a new buy signal on the daily while the weekly is still in a buy. So my signal is essentially looking at moving averages and pivots and other things and coming up with a determination of trend. And when the trend changes, I fire a signal. Now, that is not available in HGSI. It will be available as an add-on at some point. So you will not have that. If you look for it, you won't be able to use it. You might find it, but it says you need to have authorization or something. And I'll be meeting with George and figure out how we're going to go forward with it sometime soon. So as I look at any of these indices, you're going to see the same thing. We're in a powerful uptrend. This is a chandelier stop. This will be coming out with the newest update when it's launched. It's available to everybody. The last Jeffrey trend signal was here with the resumption of an uptrend on the daily. And on the weekly, sometimes it's hard for me to get the weekly going here because of where this thing sits. All right, I know how to do that. I'm just going to make this like that. On the weekly chart, you can see it's also broken out here as well. And it's in the last Jeffrey signal came back here on January 11th with a weekly buy signal. I'm going to rename it so it's not the Jeffrey buy and sell. I just haven't done that yet. So that's the S&P. They're all going to look the same. Dow Jones Industrial looks the same. The NASDAQ Composite looks the same. And the Russell 2000, which had been underneath its 200-day moving average, really moved up this week. And you could see it finally broke up above its moving average. The bongos are green, and it's in a buy signal as well. So when I look at this, I see strong markets and markets that, at some point they'll take breathers, and one would hope in the short term that when the S&P 500 takes a breather, it's coming down and retesting some of these moving averages, which may act as some support. But I do anticipate, and I'm expecting to see that we take out that September, October high. And that's sort of what my target is. Now, I put those in the chart. I don't know where I put them. I'm just looking for them. If I can find the chart that has it. I may not be able to find it. Sometimes I don't remember which machine I was working on. All right. So the markets look very strong. And I think you all know that already. You don't need me telling you that. You look at the dollar, sideways at best, really not showing a lot of momentum, but the trend is up despite the fact that it's been moving sideways. High dollar is bad for gold and silver. Here's silver and gold. I don't think it looks quite as bad, but these are not something that I would be chasing right now, certainly not until they break above their chandelier. And as I mentioned before, the VIX has shown complacencies in the markets. We've gotten down to a level that we lived in for much of 2018. So bullish on the market. So then I'm going to look at industry groups, and we'll use one of my new views here, which basically combines the two-day force with looking at my new indicator and want to know how many are in uptrend versus downtrend. So that combo rank, whoops, don't want to do that. That combo rank that I'm using here, that's not the one. Actually gives a lot of weight to the industry groups that have the highest percentage of existing uptrends, and then some if there was an uptrend, the highest weight that had uptrends today, and some that have had an up that are in an uptrend, although it didn't turn today. So I'm putting a lot of weight into these buy signals. The groups that come to the top, here are banks, oil, gas services, REITs, biotech, specialty pharma, semiconductors, consumer finance. If I take away the impact of new highs and new lows, it's a little bit different, but mostly are the same stocks. If I right-click on biotech, you can see the ones that come to the top. Now, biotech, just for those who are new to me, I'm in the industry, and I have a lot of paper that says I'm not allowed to trade individual stocks. Now, if they're companies that I don't work with, I can trade them. But if they're companies I work with, I'm not allowed to. So I pretty much, instead of trading a lot of individual biotech stocks, I pretty much trade ETFs. And so if I'm long biotech, that's LABU. If I'm short biotech, it's LABD. Biogen IDEC got hammered because of a failure in a Alzheimer's treatment drug, which is bad for all of us because it would be nice to have some treatments there. Its earnings per share growth are positive, certainly positive and much bigger than their PE. They trade a lot of volume, 2 million a day. On Friday, they did 3.5 million, but it moved up on Friday, $6 times 2 million. They have a lot of force. That's why it comes to the top. I probably wouldn't be touching Biogen IDEC. Seattle Genetics, they used to be a one-shot pony with a drug for Hodgkin's disease, and they just had some data come out which would lead to approval for a second drug. They have a $12 billion market cap. I've always thought they'd be a takeout candidate. And you can see on the bladder drug news, they had a big move on Friday. Pocket pivots, Kahuna, mobile breakout from a squeeze, and 3 days later, they turned into a buy signal on my trend buy. Vertex, kind of sideways. Celgene, it's a arbitrage play. It's being taken out by BMS. Don't know Moderna at all. I see that it's broke out and set an all-time high, and there are some folks on the who play IPOs like this and buy them when they set their first all-time high. This is it. Amgen sideways, Gilead sideways. So I look at these, and it's hard to get really excited. I like Arrowhead, sort of a cup, a handle, and then a sort of a saucer handle. And we'll see if it can break out from here. A couple of kahunas earlier in the week. Viking Therapeutics is one that if it can break above this 200 might be interesting. But there is a way to play biotech, especially when there's strength in biotech without having any individual company risk. And it's not just earnings risk, it's also approval risk and data risk. So I play LABU for the most part, and LABU actually looks a lot like that Viking. It's been in a nice uptrend since the December 26th turnaround. It's got to break above this 200-day moving average, but I'm long LABU, and that's how I pretty much have to play biotech. Second group down here is, oh, there we go, moved around again. Semiconductor devices. So I've been bullish on AMD for some time. Let's take a look. And AMD broke out on midweek. NVIDIA, last year's big winner, have to get above this 200-day moving average, which could be resistance, but certainly in an uptrend. Marvell Tech breaking out here to recent highs. That's one of the better looking charts. And I would say of the bunch, the one that I liked the best was Marvell Technology. So typically I will go through the top 10 groups, look at a couple of the specialty pharma stocks. Don't know anything about Zyme, but here's a stock that had a big breakout this week and continued to run. This is a kind of Bible gap up that I might be willing to chase. Notice that within specialty pharma, 75% are in a buy signal. They had 11 new buys on Friday and 6 new sells. I think this information is helpful, especially if you see that you have the only stock that's going up when the rest of the industry group is going down. Aurora Cannabis, not yet. I'm just looking if there's anything else. Don't know anything about Corbis. It has a little bit of revenue. Broke above the 50. It's kind of sloppy. It's not a stock that I would be buying. This is a lot better chart. Amicus, Fold, breaking out here. Couple of kahunas, pocket pivot. Don't know anything about it. Acadia. Just looking through, the one that I've been playing is Axosome, and Axosome had a huge run up, pulled back to the 17, and the way I'm still in it, and I'm tempted to buy more on Monday. I had sold some after it topped. We're sort of in a flag and breaking out of the flag with a new buy signal on Friday. So I think this one looks interesting as well. Next group down is oil and gas services. Energy was strong this week. Oil has been on an uptrend. These things have been laggards. Here's Schlumberger. How do you get excited by a stock that's done nothing for 3 months? At some point, it's going to break out and do better. You can see 12 buy signals in the services side on Friday versus 1 sell. 86% of the stocks are in uptrends. Schlumberger, to me, is kind of flat. Halliburton, kind of flat. There were some that I liked, but all of these are down their pattern. Let's see. So Cactus is one that's broken above its moving averages. This is one that would be my get on a train or get on a plane buy signal, in that if this stock trades above this PSAR dot on Friday, I might be interested in buying it. I would have my stop probably sitting right here underneath the 50. So I'd have a stop here. Let's just look at this. I'd buy it as it moved above, say, 38.05. I'd put my stop 35.45. So I'm risking 260. About 8%. This might be one that I would play of all the stocks in this group. It was the most interesting to me. I look at this 18% demand supply and I scratch my head. That's a lot of demand. Now, I've talked about AT&T a couple of times. I just want to bring it up again. This stock pays a 6.2% dividend. You want to buy it when it's low. You don't want to buy it when it's at its all-time high. If you look at a weekly chart, it ran from 40s down to the 30s. It looks like it's done going down. To me, it's an interesting time to buy AT&T, and truth be told, I bought it in some of my long-term accounts last week. That's the one I liked in this group. And normally I'll go down all 10 groups. Banks, this will be regional banks. And again, like the biotech, you got a lot of different names here. They all have, many have similar charts. How do you know which one to buy and what is your risk on earnings? So what I will be doing on regional banks, if I want to be long regional banks, would be just buying the ETF KRE, pays a small dividend, if I remember correctly, 2%, and it looks a lot like the stocks do. Again, been in a downtrend, it's failed at the 200 several times, and until proven otherwise, I'm not sure I'd be chasing it until it shows it can break above that. Is Legacy on this one, or is it? This one made my buy watch list, Legacy Financial, and I think it's a sucker for me because of the interest rates. Let's see. No, it's only 1.9. Why? Because it broke about the 200. It's got earnings per share growth much greater than its multiple. Number 6 is Internet Media. So we'll look at these real quickly. Snap, I've not owned Snap. Maybe I should stop listening to TV and buy Snap. Snap is breaking out here. It's had a huge move from 5.5 to 12, a double since Christmas. Doesn't make any money. I still have some Facebook, and Facebook is now broken back above 170. Frankly, it looks like it wants to go higher. Baidu, it's low in the pattern, but starting to move up. And everybody who's been on these before knows I like Weibo. It's broken above the 200. I'm not sure if I'm going to chase it here, but this is one that I've made a lot of money on in the past, and I keep an eye out for. REITs, with rising rates, you might be concerned about them, but the REITs have held up, did well this week as well. American Tower is probably the best looking chart we've seen of the day. Lower left, upper right, pull back into the 17, had a new buy signal right below the PSAR. Look at the earnings per share growth, pays a 1.6% dividend. It's expensive stock, but it's buyable in my opinion. Innovative Industrial Properties is another one I like. The fundamentals don't look very good. The reason why I like it is another way of playing pot is they have bought a lot of acreage for growing marijuana, for medical use cannabis facilities. WRE breaking above the 200, pays a 4% dividend, great earnings per share growth. Equinix, these things, that one's not so hot. Several of these look really good. Continuing on, e-commerce discretionary. People who've been on this know I have a big position in Amazon, so I get excited when it's up at the top. Alibaba, I think it's time to look at Alibaba again. Earnings per share are picking up, so you got a turnaround there. Earnings greater than the multiple. You're breaking out off of the 50-day moving average out of a squeeze with 2 kahunas in a row. I think that looks interesting. Amazon, we had set up, I worked through how I might buy it. The only way I would play Amazon today if I didn't own it would probably be through options because, in an options, a 30-40% point move can make you a lot of money on a stock that's $1,800. That happens every other day. Amazon has broken above the 200. It retested. I think it goes higher, but it's hard to buy Amazon here. It's an expensive stock. JD.com looks a lot like Amazon to me. It's broken above its moving averages. They're starting to get a nice little fan. Earnings per share coming in JD, and I don't know if I'm going to see YY here, also look good. And then number 10, entertainment content. I think Discovery is on my buy watch. Walt Disney kind of sideways. Fox pulled back hard. Discovery broke above the 200. Good earnings per share growth, especially compared to the multiple. That was the one that made my list. We'll see that in a second. Now, on this downside, with the market as strong as it is, I don't typically look to short stocks, but I build a short list just to give me a clue as to when the market turns. There's only one group to the downside. Let's check this one more time, one other way. And that's specialty apparel. And they didn't get clobbered necessarily, but they didn't perform as the rest of the market. A&F rolling over here at a recent high. Gap doing nothing. Capri Holdings. So nothing to write home about there. That was the only group to the downside. Now, let me show you what I've been doing with my new indicator and what will be hopefully an add-on. I am crazy, and I look at this. I looked at 800 charts today, a little bit over 800. But during the week, I don't have time for that. So during the week, I want to put a broad-based directory, all securities, and I want to be able to use the scanning and filtering and view functions of HGSI. So I've developed now a series of scans.
We have nothing to fear but fear itself.
That was Siri. I have in all securities, 257 stocks had a new buy signal. Now, if I want to know how many had a new daily buy, when in a weekly buy, it drops it down to 185. And this is a group that I do a lot of my fishing from. I could also look at stocks that have a new daily buy and the chandelier flip to a buy. And again, another place that I might want to be fishing from. I can look for stocks that had a new high close doji weekly, in which case there was 91. How about a high close doji weekly with a new PPS signal within the last 2 days? Now, I didn't look at this stock, but just take a look at South Jersey Industrial. So I know here it had a high close doji on the weekly, yes. If I flip to a weekly chart, close above the high of the doji day, so that counts as a high close doji, as populated by and invented and published by John Person, and a new buy signal on the daily. Now, I'm not buying utilities here, but that would be one that I might be looking at. And then this is a REIT, 4.5% dividend, great earnings per share growth. Doesn't look that exciting. So I have developed a series of scans that I look at. 11 new HCD daily, and then 13 new HCD daily, and a weekly Jeffrey buy. So again, trying to do various scans and things to bring the stocks that I want up to the top. I have bearish correlates, like for example, this would be stocks with a new sell signal that are already in a weekly sell. So these should be stocks, and we talk about this a little bit. It should be stocks that are in a weekly downtrend and are now resuming a daily downtrend. So I find something that's actually moved. So you can see how this one moved up a little bit and now it's shifted down. It was still in a weekly sell. Probably not going to find anything that moved up. Even Coupa, which is a stock that has been a big winner, has got a new daily sell pop in. And if I go to the weekly, you'll see that, I don't know if that, I don't know why this, oh, wait a second. What was my scan? Yeah, it's in a weekly sell from a couple days ago. And then it just had a daily sell come in at this time. So I've been playing around. I'll be working with George to finalize the add-on, change the names or give it real names. And hopefully before too long, we'll talk about a new vehicle of distribution of indicators and scans. And we'll go out and reach into various gurus to get them to participate. But these add-ons will have an annual charge to them. So, talk a look about what I was interested in. A lot of stocks look good. I can't deny that. I found a lot of things that interested me. A lot of stocks have had a big run already too. So these were 65 stocks that made it to my watch list. From several biotech, oil exploration, services, kind of the ones that are moving in the market, REITs, specialty pharma. I kept AT&T there. Any that I wanted to show you because I liked it more than others. The benefit of top-down analysis, you've already seen most of these. Whiting is a petroleum company that I've had in the past. It's been sideways. You'll see many of these are sideways. It had a move up on Friday, so this one I put on my buy list. I just wanted to show you this. On Friday, 37 of the oil exploration stocks had a new buy. None had a new sell, and 84% are already in a buy. I think energy is going to catch up to the price of oil. One of my favorite healthcare companies is Invitae. This one's had a big run up, but it's pulled back to a point where it might be okay to buy it again. Sort of a flag, pull back, and a breakout. Notice mobile breakout from a squeeze, pocket pivot, and a kahuna. Some of the hotel stocks look interesting. Another Chinese stock that I liked was YY. 3.6% demand. Kind of looks a lot like Weibo and JD. Excuse me. Here's one of my favorite oil gas services, Pump. Best name ever. This was in a huge uptrend. Notice that my daily buy signal fired here on December 31st and would have taken you out every time there was a little pullback. The advantage of the weekly signal is it's not nearly as up and down, up and down. It put a buy signal in on the Friday, January 11th. Now, my signals will show up as the bar is painted, so the signal would have been there earlier, but it doesn't count until the bar is closed. And notice Pump has some good fundamentals too. So on that note, I think I'm going to say goodnight. Hope you all have a great week next week. You know, markets don't go up forever. And I think we all know that. If we look at, for example, the E-minis or the NASDAQ here, I'm starting to see these red dots, which are MACD divergence. Now, we can get these for a while before the market pulls back. We're at 94% of the high jump. So we are at a point where we probably are going to pause at some point. E-minis got the red dots. It's at 96%. The Russell is at 79%. And the Dow has got the red dots and is at 91%. So we're getting to a point where I think a pause to refresh is in the cards. Not necessarily a hard sell-off, but at least a pause. On that note, I'm going to say goodbye. Have a great Sunday. Bye, everybody.